was a melt-up, John Golub, X number of weeks ago. Are we still melty-uppy?
Yeah, I think so. What are we, 3% off of all-time highs?
It's a correction. It's a bear market.
The 3% contraction on trade concerns. But no, I don't think that the likelihood of recession is there. The economic data is fine.
Yeah.
The earnings fine.
This
is going to go up.
This is so important, folks. I'm sitting here looking at the acclaimed J screen of Bloomberg, all the news flow coming by. Iron ore is at a record price because of demand for China, and we're worried about the overlay of global demand with all these stories we're covering, and yet you could still stay bullish, you could still participate in the market.
Well, I think the key here is that you don't need to have a roaring economy to have a perfectly fine stock market. So is the economy great? No. You have PMIs, these surveys done of executives on their spending expectations are showing that they're decelerating a bit, Tom. I mean, global economics, if you look at Europe, it's weak, but there's a difference between modest growth and a contraction, and that's, I think, where we are.
Jonathan, the more this trade war continues, even if it doesn't escalate, how much does it shave off world GDP? Do we have an estimate?
Francine, I think it's a question of, first of all, the tone as well as the duration on this. If we're really attacking supply chains and undermining the ability of businesses to do what they need to do, then this could be quite big. But the way it looks right now, what are you going to get? 10 basis points, 20 basis points max on global GDP? If this is contained, it'll be a blip, nothing more than you would see in a normal set of incoming data.
But will it be contained? Is it difficult to know whether it's contained?
Yeah, it's difficult.
We were expecting some kind of deal which we never got.
It's difficult to know, but yeah, I don't see anything here which is indicating that they're looking to escalate this to an all-out trade war where they're actually attacking supply chains and holding back strategic capabilities and things of that nature. So, I think the key here is we have to step back. What is it the administration is trying to do is to level the playing field because China does not allow access of foreign companies into their market. China requires that you use these joint ventures. They're subsidizing of industries. And so the goal here is to actually create something which is a positive for trade over the long run. It's not simply to get a better deal, it's to get a fair deal. And on that context, I think that will be perfectly fine.